Hello. We got to do a mic test to make sure it's not quiet like it was last time. So someone in chat, let me know if you can't hear me that well, and I need to do some changes because I don't want to start it and be quiet. Happy 4th, everyone. Happy 4th. Will be a quick stream, not too long. I just need to make sure the mic isn't low and you can hear me fine. Because last time we had some problems. All right, looks good. Everyone's saying it's good. Dope. Okay. Issue 1 out of the way. All right, let's get into the sauce. Should I tell everyone I'm going live now? Yeah, I know the screen's not displaying yet. Oh, here, let me change it over. There we go. Happy 4th of July, everyone. It's been a great weekend for us. Hoping you guys were in the plays, giving out. A chill day today. No real New York session open up for legacy markets. I know FX is still open right now. Don't want to worry too much about the FX markets being open. The real New York session will be open tomorrow when we'll get a lot more data on how we think the market's going to play out. But we'll get into the meat and gravy of today's stream. As you guys know, last month, we'll do a quick recap. Last month, June, not too many trades taken. Did about 12 trades in total, 13 if you count the BNX short position that we took. Great month. No losses, solid trades. Can't say much else about it. Amazing month. Next up, the last week's sentiment. So when I did my stream last week, I'm turning the music down a little bit. Turn the music all the way down, actually. We'll see if we can do like one tick. A little bit of background noise isn't too bad. If it gets overwhelming, you guys let me know. So last week's sentiment, we'll go over what we talked about. I have all the notes here, right? We went over USDT dominance as we always do. We went over Bitcoin dominance, and I'm not going to go over those two things this stream because I don't think I looked over them before the stream started. There's not much to tell you guys. We went over the Bitcoin sentiment, high time frame to low time frame. I told you guys that we were still in a macro bear market. Of course, this isn't going to change in a 2-3 week period. I said we are bullish into next week. Key triggers are 23K to shift the trend. I have this listed and I'll talk about the technicals in a second, give you guys the visual of what this means. 23K to shift the trend to still micro bullish. The macro is about 30K and we'll go into that in a bit. Under 18,000, bear trend continues on a micro standpoint, and with this, I suspect that legacy markets also take a pretty massive retrace as they had a great Friday. As you guys know who trade stocks, I mean, SPY ended the day up 2.5% or so. Amazing. We love to see that strength into a Friday, into a long weekend. I suspect that we'll see, a decent retrace coming Tuesday, but a continuation throughout this week. We also did Link, Maker, Aave, Comp. These were some of our massive coins that we wanted to take longs on. And as you can see in our June recap, we took longs on all of these and made great profit. So follow the plan, and it paid out. We got paid. We went over SPY sentiment. We said ES futures were up, and this was, I want to say, Thursday of the last week. Massively bullish for us moving into the week. And then, in all caps, looking to go long. And as you know, the longs have gone long, and we'll go over exactly what we did to go long and how we came up with some of these choices for our long positions. The first one I want to go over is going to be that Bitcoin play, the one that I keep showing everywhere because it was amazing. And if you guys want to, I post the GIF, but it was spectacular play to say the least. You know, we caught the literal bottom. Not to say that this is going to be some type of generational bottom here, but it actually does not get better than this. I can pretty much guarantee you that if you're in PlayBit and you took these positions with us, we have the lowest entries of probably any other crypto trader right now. And I can almost guarantee you this. I can pretty much guarantee no one has entries at this point, and we'll go over how this happened, why it was actually such a spectacular play, and how fast it actually occurred. Most of you already know this, but for those of you that don't, I want to recap the entire play, why I chose a certain level to go long at, and why it actually bounced at that certain point. So let's get started. I'll see if there's any questions. What's up, everyone? See Dano's in chat, Texas in the building. We'll love it. Someone said it would be great if you could propose leverage for the calls, 5x leverage or 10x. I don't care what you pick. At the end of the day, choosing leverage is choosing how much you're going to borrow from the bank. I'm never going to tell you how much to borrow from the bank. I'll give you, a good recommendation. Borrowing less from the bank is always better. Some of you might want to borrow 50x or 100x. Playing spot and playing leverage is exactly the same. Unfortunately, one does have the opportunity to remove some of your funds automatically from the account if you are over leveraged. So make sure that you understand that. But for the recommendation 5x, 10x, that is the leverage I'm proposing to you. I may use more. I will borrow more from the bank if need be, mostly on majors because the funding rates won't be too bad. Okay, on to the Bitcoin play, and we will do the replay function here to show you guys exactly what we were looking at prior to the play actually playing out. So the first thing on the high time frame analysis here is there was a few things. We had a massive point of interest hit here right at 17,000, 18,000. I think most of you know what this was, and this was near the 2017 all-time highs, right? This was right into the retest of 2017 all-time highs and right into the 2017 all-time high break. So 3 different confluences here for this to be a point of interest to start looking for at least some type of bounce, right? Whether we label as a dead cat bounce or not, this is where we want to start looking to get into long positions as the confluences are there after a 40% retrace in price. Next thing was within this small zone, we took entry. There was also a larger zone at which was the main point of interest, and it was this 1 hour fair value gap plus the 4 hour fair value gap. So there's 2 major gaps here that gave me most of my confluence for this position. I don't want to go over exactly how to find these gaps. I'll give you guys the quick explain like your 5. You're taking the massive impulse candle, the candle before its top close, and the candle before its low close, okay? Between those 2 candles is the 4 hour gap. We are on the 4 hour. That is what we call the 4 hour gap. Between these massive impulse candles gives you a ton of leftover limit orders that did not fill, and market wants to retrace back to where majority of liquidity is, and majority of liquidity will be between these gaps, and that's where the 4 hour comes from. Next up, we have the 1 hour gap, which is a little bit more precise here, and as you can see, it's a tad bit smaller. You would just be taking the low close of the next one after the impulse and the high close of the previous one. In between there, you have your next gap, and we'll highlight this one again to show you exactly how we pinpointed this section. We'll extend this. Boom. And then within our 1 hour gap and our 4 hour gap, right, we have 2 major point of interest. We move down to another fractal time frame. We move down to the 15-minute, right? And I'm sure most of you remember this day, right? This was June 30th, right before the quarter 2 close, but also majorly the 6-month closure going into the next half of the year. And if you remember trading this, we had pretty much one of the most violent impulses we've had in a while. It was roughly 11% on an impulse from this exact level. Now, the same thing I said about the fair value gaps is where these impulses start, they will leave gaps or they'll leave us point of interest order blocks for us to play off when price retraces to the zone again. Because when you have these massive impulses, bet your dollar that there is a ton of orders left over within here that are not getting filled, and where there are not orders getting filled is where there is liquidity, and that's where we want to find our entry, where the majority of the liquidity is. And that's what we did with this. We took this 15-minute order block here. We took the red candle before the green candle that produced the major break of structure, which was right here at 18,000. Let's pull up the exact post. So for those of you that may actually not even be this server, you can see exactly what we posted here. took the 15-minute order block, which is the entirety of the previous candle close before the candle that sponsored the massive break of structure. Let me post this on the screen for you guys. This is the nitty-gritty details of this signal that you guys remember. Here it is on screen. Told you guys I'm only focusing on the majors, Bitcoin and ETH. Stock market closed extremely bullish, as I said earlier in the stream. We'll be looking to take Bitcoin longs right under 19,000, right? Right under 19K. We're taking it from the 15-minute order block. As you can see, specifically right in the $18,824 range. And that is exactly what this level is right here. And then I gave you guys the stop loss. We're gonna have an invalidation of 18,500, and this would be a break of the lows, right? This would be a break of these low candles here. If those breaks, then we can understand that the trade is invalidated. And then I gave you guys some TPs, and we'll go into that in a second. And we all know how it played out. We'll just play it here. And as you can see, it looks like a massive scam wick here, and it instantly retraces. We'll go down to an even lower time frame here to the 1 minute and show you guys what happened. Now, I will say for those of you that aren't used to trading these order blocks or these fair value gaps, normally we don't see price react this violently. This is obviously what we want to see majority of the time, but our fair value gap is right here in between. Let's change the colors. Yellow being our 15-minute fair value gap, right, or 15-minute order block, and then the gray box around it is the higher time frame point of interest. So we had found within, I'm gonna go over this one more time because it's very important that you guys understand this concept. Within the larger 4-hour fair value gap, we denominated it down to a lower time frame, 1 hour, found a smaller gap at which we want to find a point of interest, and then we went down to another fractal time frame at 15 minutes and found another more precise and concise level, which is the yellow one here, which is where we want entry. Go to the 1 minute time frame, and we're just showing you guys this. Show you how violent that was. Price is in search of liquidity. It's up to you to spot this liquidity. If you can't see the liquidity, as Casper always says, you are the liquidity. Spot the liquidity within the 15-minute point of interest, and within, let's say, it was maybe 40 or 50 seconds. If you didn't have limit orders, that's how much time you had to get in, and we've never seen it at the same price again. So congratulations if you took the play. It's continuing, and we have already hit the first TP. Any questions on that? That's the entirety of the play. Broke it down, 4-hour point of interest, 1 hour point of interest. Find the 15-minute order block that sponsored the massive impulse, right? The massive impulse that took out the previous high and took out the supply from July 27th or June 27th, right? There we go. So that's the beauty of the play. It is up about, I want to say 4R, and we'll get about 5, let's call it 6% right now. Fantastic. I can't complain at all with that. I do think we're not done. So if you've sold the entire position, I would encourage you to continue to look for a long position on this because we do have the next key level for a lot of you that are new who don't know some of the key indicators I use or key confluences of break of structure and sponsoring another massive impulse will be these 200 EMAs. And as you can see, this 2-hour 200 has been the bane of the bull's existence recently. However, something that we do have to note here is price is consolidating near these levels, meaning a lot of the supply is drying up, meaning we can trend shift to the micro bullish side, so bears can then accumulate their fuel throughout the range and then continue their trend later. And that's what I see exactly here on this 1 hour 200 EMA is we are now consolidating near it instead of doing what happened last time and immediately retracing the entire move within 12 hours. So this gives me confidence that we will continue this trend here and we will be able to juice our position for a lot more. And that's why we do have some TPs higher up in the range here with one of our main TPs, which I thought we hit earlier, is actually that high time frame volume wall, which is at $21,200. Thank you for some of you who corrected me in chat because I thought we hit it earlier, but we did not. And this main volume wall, for those that don't know how to actually find these high time frame volume walls, are from these visible range profiles that give us the volume per price scale instead of time scale. And the time scale is going to be based off these. This volume you see is a standard volume you see everyone using. This is time-based volume. This is price-based volume. Both give you good information. One I prefer over the other. I think you know which one that is. So that is going to be the main TP. We're going to come up to this major point of supply where we stagnated for just about a month. So this is an entire month of accumulated supply, and we have quite the range to move here, right? This is probably one of the furthest TPs, but this moves me into one of my next bullish sentiment. I know a lot of you want to hear the bullish sentiment. I've been bearish for quite some time. The bullish sentiment will be a massive break of structure if we can get over this 30K range, and it's going to be specifically around $32,400. Now, I've said this for a few streams already when we've been trending down below here in this low $20,000 range. We are not going to flip bull at all unless we swap any of the liquidity up here, and that is over a 50% move on Bitcoin. That is roughly from current price about a 62% move. So please, just because we're in longs does not mean it's a bull market again, does not mean that this is the generational bottom. I'm telling you right now where we need key levels to break for a high time frame macro bullish shift in structure, and it's going to be at $32,400. This high being broken, right? Any of these relatives high here need to be broken, and maybe we can start talking macro bull. But again, we are not macro bull, macro bear still heavily. We have a lot of key levels to break, but internal micro bullish is still on the table here, and we are going to be bullish, I believe, throughout the rest of the week here. So longs are on the table to look for. Longs are on the table to look for, but please, for the love of God, as we've been talking about, don't get greedy, right? Don't get greedy with the longs that we're taking, please, because for some of you who may have taken this position, right, who may have taken the previous position with this insane long, right, and you're like, all right, I'm just going to go to sleep on the long. You wake up in the morning and your long is now back at your entry, and you got stopped out of break even, and your opportunity cost was losing the entire profit margin that you made. So please don't get greedy. 2020 and 2021 was the time to get greedy. Right now is not the time to get greedy. You got to play concise. Position sizes need to be pretty much exactly the same for every trade you take. Manage your risk to reward ratios, and let's kill it. How long is the stream so far? 23 minutes on the stream. I don't know what I had planned next. I want to talk to you guys about this play. Sentiment into the week. Bullish sentiment this week. Again, macro bear, micro bull. Again, I have no indication at this time to tell you guys that we are going to see some type of major retrace to the lows. The only, and I'll bring up this, there's one concept that tells me that there's a potential retrace from these highs here to then sweep low liquidity and then give us our next fuel to the upside. And this is going to be, and I hate talking about this because it's not something that I trade too often, but it is something that is coming up, and the schematic is, starting to make a little bit more sense. So some of you may know this. We do have potential accumulation coming up on the White Coffee schematic 1. The only way that this would potentially work would be, and there are phases where we don't get the test in spring. Tests in spring haven't really occurred yet, and that would mean testing in spring below the point of interest, taking out all of the long liquidity, swapping them all into shorts, and then obviously we can have our mega short squeeze at the lows, and this gives us the spring test, and then the bullish structure starts. And this is potentially, if this happens, this is what will change the macro structure, as this absolutely, if this hits, right, this will absolutely send us to the $32,000 range. So this is the only potential where we would need lower liquidity, right, because there might not be enough here yet. And we'll see this going into the rest of the week, probably by Thursday or Friday. I'll come back on and I'll tell you guys if I believe we have enough liquidity or not to run full course and probably see these higher highs. Major targets, as you know, we're looking for a break of $21,900. It is this high in the exact mid-range. This breaks, internal structure is going to be full bullish. Right above this, you have a high time frame volume wall, and there will be an immediate retrace. This breaks, you don't long here. You do not long as this breaks, you long in the retrace because it will retrace hard. So hit this, flip bull internal, and then we do have this 200 EMA in the 4 hour, which will be the next bane of the bull's existence. And that will be our next course of action to break in order to tap some of this liquidity on this massive drawdown. As you can see, 4 hour 200 really hasn't been broken in a very long time to swap anyone's opinion on macro structure. Pretty much since 42,000. Last time we had this 43,000, 42,000, 32, 31, and potentially this week we come and test it again. Okay, I'm gonna look through chat because I haven't looked through chat this entire time. I don't know if there's any questions yet. Okay, no questions. Explanations on point. Thank you. I hope you guys were able to easily digest what I said. Yeah, in short, bullish for this week. ES, I don't know where ES is right now. ES has retraced. What is this? Friday. First. How much have we retraced since Friday? We have retraced Friday's high by about, it's called 1/4%. 1/4% retrace from Friday. I suspect this breaks again on ES. ES is very important here. Bullish as well for SPY. SPY sitting on top of some pretty major volume shelves. Has taken over some key levels that we've been waiting for. Has filled some major gaps. And I don't suspect we have any more gaps. Maybe I'm wrong. Oh, this is a gap. Hold on. Daily. We have one more gap and I suspect this fills. Yeah. So this is another major confluence for a bullish week is roughly, that's a huge move, guys. Roughly a 5, let's call it 5.25% move to fill this gap on SPY, which by my understanding is the only gap left in the legacy market indices. So macro bear, micro bull. Keep the longs flowing. There's only one scenario I see in which we do have a retrace of the entire structure, and a retrace of the entire structure is not a time at all for you to get, angsty about, your positions. It's a time for you to understand the manipulation of the structure and the potential expansion to follow after. I don't know if it's too likely that this occurs. It's kind of like a pipe dream because everyone that has missed these lows to get into longs is pretty much waiting for cheaper prices, and the market isn't going to give you what the general market wants. So that's why I suspect that this doesn't happen. If it does, please, Lord, do not get scared from a 17,600 break. This is such a high risk to reward ratio trade to take this that we will be taking it if it does happen. But for now, we're riding the current Bitcoin longs. Someone said for the visible range, if you're trying to look up the visible range, it is called visible range volume profile. There you go. Someone said, any alts you've been looking at? Let's go back to the stream notes. So we did that. Boom. Next thing I said, I don't really want to go over alts. Unfortunately, I'm sorry. I really only want to focus on the majors. Like this week, I'll only be trading SPY most likely. And I won't be looking at individual stocks, maybe just Amazon and Tesla. The same goes for crypto. There's not too many assets I'm looking at right now that pique my interest. The main thing I'll be looking for is just weekly performance, and I'll be going through the weekly performance and I'll be picking out some of them that I like. Currently, as we can see from the bubble chart, SNX, Curve, and Atom, and AR, right? We have a few majors. Forget this piece of trash in the corner. We have a few of these that we'll be looking at. Remember, we're not here to go and choose the worst performers. We bet on the fastest horse, and we continue with strength in the market. Something I see a lot of new traders mistaking is they go to the worst performing asset of the day, right? Go to Hex, and they buy Hex because it's down 15% in the day, and they think that this is the one that's going to give them the largest percent gains. Because why would you buy something up 20% or 16 and 30%? Very, very much so a rookie mistake. There's a reason it's down bad, and there's a reason these are up. And you bet on the fastest horse 9 times out of 10, you're winning the race, right? So don't bet against the strength of the market. You can pretty much go back and back test this theory as much as you want. Betting on the fastest horse, and as I say fastest horse, the strongest concurrent coin in the market is going to net you good results 9 times out of 10. And we're here for a probability game. We're not here for the prediction game. So take it where you can get a 90% probability success trade. Take that one 9 times out of 10 instead of going for the one that has a 10% chance of good profits but doesn't hit. Okay, does everyone understand the sentiment for this week? We just hit 31 minutes. I wanted to keep it short and sweet. We have keeping it short and sweet. We did keep it short and sweet, I think we're good to go. We got a few different scenarios here. The main scenario that I want you guys to understand is the one that's coming up that should play out by the time 4th of July is over. 1 hour 200 EMA breaks. Let's go search for some liquidity, potentially within this range. I know there's some supply up here right now. We'll get some type of reject, come back, retest it, and let's continue on with the trend. The next, and I should say this as well, the next coins that I will be looking at taking long positions should be, I don't know why I brought up curve, should be Ethereum. So as I said, I'm focusing on the majors, Bitcoin and Ethereum being those. Also, I should bring up, there's a absolutely beautiful play on Ethereum that I wish I sent out to you guys. However, I did not, and I didn't have time for it. But 4 hour fair value gap, guys, they hit the best fractals in the market are 4 hour daily, 4 hour, 1 hour, and 15 minute. Remember, we're taking the lowest candle close, and we're taking the highest point of the previous candle close, right? Within that gap, there are orders to be filled. Where are the majority of those orders? I'm glad you asked. The majority of orders are always at a 50% retracement. And what did we get on Ethereum? I've already plotted it here. And this is your picture perfect entry as you buy the high of this range, because you want to front run these orders as you buy the high of the range, taps into your zone, and you're off. I think it's like 16% or something, 12% now. So very, very simple concept. Don't overcomplicate it. There's not much that you need to make highly probable and highly, I call them addictive sniper entries, as when you get things like this, it's hard to not use this strategy multiple times. If you are looking for more highly advanced techniques and more highly advanced smart money concepts, or institutional money concepts, we do have several streams going on this week. We have 8 different events. Tomorrow night we have it with Flo, and we do have a tomorrow night trading session with Casper. Both of them trade these exact concepts, not the same way I do, but they do have more analytical and technical strategies than I do. So I highly suggest you attend their streams to learn something more. Someone said, if you're not in Bitcoin, is there any level that you look to get back in? Great question. I suspect, I pray most of you are in Bitcoin. If you are not in Bitcoin, let's just take the same concept we took last time. Take one of the red closes before the impulse break, red close before the impulse break, and bada bing, bada boom, right? This is going to be a fantastic area for you to find your next long entry. It coincides perfectly with, I hate using this term, but you guys will understand it, the retail supply demand concept from the previous high. As you can see, previous high posed as resistance, breaks, retest, continues, same thing, and the zone has a nice order block here. So this is 19,500. Actually, it's a little bit higher. We have to call it 19,000. We'll call it 19,600 because it's just the average. 19,550 would be your next entry for this, even if you want to build or average up on your longs as well. So that's it, guys. Quick recap, under an hour. Thank God. Normally these are way over an hour. I think this is under 20 minutes because we were streaming. I didn't hop on until 10 minutes in. All right, guys, thanks so much for tuning in. I don't know how many people are in here. It is 4th of July. I appreciate you if you are here, because you're taking time away from your holiday to learn something new and improve your life financially. So thank you, guys. Happy 4th. I'll be hopping off today. We'll get into it this week. Plenty of streams and plenty of other diverse traders for you guys to learn from. I know there's a ton of new guys in here who haven't seen me trade before, or seen Flo or Casper or Glacier or any of the other analysts on the team. So make sure to head over to Lessons in Crypto, and you'll be able to see the 8 different events you guys can RSVP for. If you're on the stock side, it will be in notes. We'll plan some stock events as well, because I know we're crypto heavy right now. We'll plan some stock events where we can come in and we'll do option flow analysis, maybe with our boy Clayhams, because I know he's an option flow maniac. So maybe we'll have a stream with him for those of you who are trying to get more into non-traditional, non-binary option trading in the legacy markets. Maybe, I don't know, some of you guys in crypto have been trading crypto your whole life. Come try something new, right? We kill it on everything. Go check the trade recap for our stocks in the options section. We do them all. So that's it for today, guys. Enjoy the rest of the day. Have some fun. If you're doing some crazy fireworks, make sure to send some videos. I want to see them. Other than that, peace out. Let's have a great week. Again, to reiterate, macro bear still. Going to be a while till I ever tell you guys macro bull again. So micro bull, macro bear. You guys know the vibes. It hasn't changed.